to Goldfields, right? So remember, importantly, this one split like 2.5 years ago. So when you talk Goldfields, you're talking about the company which has principally international operations, particularly mines in Australia, Ghana, Peru. The one in South Africa that they retained was South Deep, which is a new era asset in the sense that it's not the old deep level vein based mining. It's very deep level, but they have a cave production methodology which supposedly is going to scale up pretty well. The market capitalization 28.3 billion rand. Price to earnings ratio is showing up with a real number. That's because somewhere along the line in the last 12 months they did actually make a profit, but it's a very high PE, 329. Dividend yield, they did ship out some cash, so we're looking at a 1.1% yield. So, I mean, Nick Holland at the helm here, the split actually, it appeared, worked better for the Sibanye part, which we'll talk about in a minute. But as far as Goldfields is concerned, operationally, how are you liking what they're bringing to the table? And as far as South Deep is concerned, what do you think about that asset? Because it's had a very slow ramp up.
Yeah, well, I think that's why they're not been performing, is because of South Deep not performing as everybody thought. It's a bit more mechanized mining, skill shortages, etc., and a few excuses over the last year on that specific asset. So all of these guys operate on that ounce, that all-in cost per gold getting out of the ground, and these guys, because they're struggling and they're not getting the ounces out of South Deep as they should, they're actually making losses at the moment. So I think it's pricing out in about 1,142 all-in cost on the latest quarter.
That's an important metric.
So that's not a good thing for them. But I think if they can get it right, there's certainly lots of upside. And I think most of these guys got lots of upside, but you need a higher gold price, and you certainly need more economies of scale within operations.
Just looking at that chart, you can see that they had a very good start to the year, and I remember that actually, you know. So this is a frustrating environment, because somehow you sense that, you know, occasionally you have these very sharp spurts in the share price and then sequential disappointment. Does that mean that they're kind of trading stocks rather than long-term investment type scenario?
I think in the old days people used to trade these shares because they were very volatile. I think they were like a beta of 3 against the market, and there were certainly lots of opportunities in those, and it didn't have nice long-term trends. It certainly looks that way at the moment as well. But I think at lots of these cheap valuation levels, you probably can look at them, adding them for the longer term.
Okay, so what you're saying though, in summary, is that they need to somehow get to higher production targets at South Deep. Are you confident? They got a guy, I think, who was GM at Royal Bafokeng Platts, who came in and joined them, who totally re-looked at the mining strategy for South Deep, including potentially either getting more Australians or sending the Australians home. I can't remember what it was something about Australians. But do you get some confidence that they're going to solve those problems?
Not yet, and I think that's why the share price looks that terrible at the moment, because I mean, these guys should actually do lots of more ounces, and they should actually get their all-in sustaining cost per ounce down a lot. But
for the moment, a little bit murky.
It's not happening at the
Although
moment.
they did get the positive resolution of that SEC investigation into their empowerment structure that came again in their favor. Anyway, hot or not on this one?
I'm going to go not hot.
So avoid for the moment. Yeah, for me, not hot.